All right, perfect. It is 11:02, so we're going to go ahead and get started. Again, today we are talking about navigating uniform guidance, and we have our fabulous host, Adam Holzberg, CPA and partner here at Sachs, and April Kushner, CPA and partner here at Sachs.
Thank you. Just one quick hello to everyone. My name is Adam Holzberg. I'm a partner here at Sachs in the audit practice for the non-for-profit sector. Have a lot of experience, all things uniform guidance, and really excited everyone had the time to join us today. I'll pass it off to April.
Hi, everyone. I'm April Kushner. Thank you for joining our webinar today, being hosted by our firm, Sachs. So real quick, Sachs at a glance. Sachs has been in existence for 70 years now and has transformed from a traditional accounting firm to a forward-thinking, nationally ranked leader in accounting, tax, and advisory services. As a firm, we are proud to serve the unique needs of closely held companies, family-owned businesses, not-for-profit organizations, and high net worth individuals. We have clients in a variety of industries, but specifically for nonprofits, we provide a broad range of advisory services, including client accounting services, fractional finance, HR consulting, and specifically attestation services like audits, reviews, and compilations. And we specifically specialize in uniform guidance regulations and government auditing standards. So today we wanted to bring you the topic of the uniform guidance updates that have happened in the past couple of years and how they're going to impact your organization and what you need to know if you have a single audit coming up in the next few months. All right, so what is uniform guidance? Uniform guidance is a single set of rules governing all federal grants and cooperative agreements. So it covers cost principles, administrative requirements for federal awards, audit requirements, subrecipient monitoring, procurement standards, recording and record keeping, all different areas here. So who must follow uniform guidance? Nonprofit organizations, state and local governments, universities and colleges, any for-profits also receiving federal financial assistance. So as a reminder, if you receive federal funding, you are required to be in compliance with the uniform guidance regulations. So whether or not you meet the threshold of requiring an audit by a CPA firm, you still have to make sure that you're in compliance either way with these grant rules. So in 2024, there was an update to the uniform guidance rules. The reason for that is incorporating, more clarity into the guidance. They wanted to address any inconsistencies in the terms throughout. And as you see on the next page, this was really the biggest update to the uniform guidance regulations since it had come out about 10 years ago. So we can move to the next slide. So here now, the uniform guidance regulations that had changed, they came out in 2024. So you may say, well, wait a minute, it was a few years ago. But it's effective for all awards beginning October 1, 2024. Some awards are annual, some awards can also be multi-year. What the guidance also changed was the single audit threshold. So when you need an audit by an outside accounting firm, the threshold had increased from $750,000 to $1 million of expenditures. So what that means is for an organization that is a December 31st year end, so your year end probably passed a few months ago, you're going to be subject to these new uniform guidance rules if you are expecting a single audit for 12/31/25. For a nonprofit that is a fiscal year end, if you are a June 30 year end, your June 30 26 audit, if you meet that $1 million threshold, is now going to be under these new rules. So we wanted to make sure that we bring you these updates so as a nonprofit, you can ensure that you're going to have a successful audit if you're going to go through an audit in the next couple months. So here are some reasons for the change. As I mentioned, this is the most substantial update to the uniform guidance from when it first came out about 10 years ago. The government had decided there was an excessive administrative burden, and so there was countless hours being spent on single audits. They felt that there was barriers for smaller organizations, those that fell right above that $750,000 mark that had to go through a single audit. They also found feedback from other organizations about the 10% de minimis rate that the Uniform Guidance Standards reference. And the 10% really wasn't enough for a lot of organizations. It wasn't enough to cover all of the overhead that it takes to run an organization and to be able to deliver your mission and your programs. The feedback was also around the IT, that the cybersecurity threats had evolved a lot over the years, and that there should be some updates to the IT documentation and the cybersecurity documentation that an organization should have. There was also some inconsistent terminology and also some issues with pass-through guidance. So a lot of federal funds are passed through individual states, and so they wanted to really update and enhance and clarify some of the rules when there are pass-through funds going from federal through state agencies. So there were some terminology changes as well. Here we have for you some old terms and new terms. So the old term used to be a non-federal entity. They changed the term to be recipient or subrecipient of federal awards. The old term was awarding agency. Now the new term is federal agency. The old term was grants and agreements, and it's now federal financial assistance. And the old term was a CFDA number. So that was one of the catalog of federal domestic assistance. So that was the number in which you needed to be in compliance with those rules. It's now called an assistance listing number. So when you prepare your CFA and your schedule of awards at the end of the year, you need to list all the required elements. That column for CFDA is now going to be an assistance listing number. And that's how you find all the rules and regulations that apply to your specific awards. So we're going to move into our first polling question here. Does your organization currently receive an audit in accordance with uniform guidance rules? So there is a QR code here at the bottom of the screen. You'll want to scan that with your phone, check into today's session, and you should be able to see our polling question. This will give us an idea of the organizations and our attendees today, whether or not you currently receive an audit in accordance with uniform guidance rules. Yes, yes, but we may fall below the new audit threshold going forward. No, we're growing and seeking funding that might result in a UG audit in the future. So in order to receive your CPE credit for this session, you do need to answer 3 out of the 4 polls for today's session.
All right, and we've got some votes being casted. We're down to our last few seconds, so get those votes in.
Okay, so we see that 51% of our attendees on the call today currently receive a uniform guidance audit. So hopefully you find these updates helpful, and hopefully you'll have a clean audit when you get to that point of your year. All right, I'm going to pass it to Adam. He's going to talk about some of the internal controls changes.
All right, so let's get right into what exactly is changing within uniform guidance. So there's really not one major massive change. It's more of a lot of smaller changes or clarifications, as OMB sometimes put it, that you need to be aware of. So when speaking about internal control changes, the original uniform guidance essentially said for internal controls, it was to establish and maintain. OMB thought it was implied that it should be documented. However, that wasn't always occurring in practice. So they now clarified that they expect almost all controls, essentially everything, to be now documented in some form. So in the past, where you could have had verbal communication of these are controls, we do X, Y, Z, that's no longer sufficient. So now you need to have your controls on paper documenting what exactly you're doing. Essentially, they're taking the stance of if it's not documented, then it doesn't exist or it didn't happen. And with the controls, it's the same original framework of COSO. If you're not aware of COSO, it's basically 5 components: control environment, risk assessment, control activities, information communication, and monitoring activities. So basically what we've done here is kind of translated those components into more practical areas for an organization. Now, I know for a lot of organizations, you probably already have these areas documented. So really not much needs to be changing for you. Just want to revisit, make sure you cross your T's and dot your I's. But what's being looked at is, making sure there's a code of ethics or standards of conduct. Your HR policies are in order, where you have, proper job descriptions, documented hiring standards, things of that nature, and also ensuring you documented your organizational chart, lines of authority, things of that nature, and also additional procedures regarding if there's any issues, fraud, waste, abuse, making sure that's all documented. So really the key change here is that everything now needs to be officially documented. Also, just continue with more controls, financial management. The accountants always are very looking closely at financial management procedures. These are your controls over financial reporting and compliance here. So making sure that's all documented. And with this as well, so it's not just the controls being documented, it's the activities associated with it. So for instance, review and supervision. Um, in the past, maybe there was a verbal approval of the invoice that was then paid. Now, with the new standard and the clarification, a verbal approval is not really sufficient anymore. Now it needs to be some sort of written approval, whether it's email, initial or stamped on the invoice. It's a electronic authorization through some sort of bill pay online. Whatever it is, it just needs to be something that's documented that could be seen by a person. And also the final one here, procurement procedures, that we're going to go more in depth later on, so I won't really touch on that one right now. So one area they did add into for internal controls, and April mentioned this before, is regarding cybersecurity. So when Uniform Guidance came out, 10 plus years ago, cyber threats were an issue, but it's not to the level it is nowadays, where it's a major concern for essentially all organizations. So OMB want to properly reflect that in their standard. So cybersecurity now is required to be part of your control environment for federal awards. There is no one framework that's being required. So that was a question that people have for OMB. Do we need some sort of specific framework that we need to follow? OMB basically said no, but we'll look into that in the future. So right now, the idea behind it is to ensure you have a framework that matches your organization's complexity and size is really the way to approach it. And with cybersecurity, I mean, I'm sure you are working with some sort of third-party provider. So working closely with them to make sure your cybersecurity policies are in line and any enhancements needed. You are allowed to use federal awards. So cybersecurity enhancements, you can use federal awards unless the contract specifically says you cannot. So that is an allowable cost in most cases. But the audit implications of this is that cybersecurity is now an audit issue, not only just an IT issue. So that's an area where auditors will now be looking, making sure that you have these policies documented and in order. And as long as it's considered reasonable, there's no real concerns on your end regarding compliance with this issue. So what exactly they mean with reasonable? Next slide. So we have here some points on what's considered a reasonable policy for an organization. So essentially, it starts off listing the scope, which services, systems, and data are covered, what are the roles and responsibilities for cybersecurity, and the acceptable use of the IT systems and devices. Also taking a look on who has access to what system, and then with that access, what are the procedures to add users to that system or remove them? Additionally, whether or not there's any multi-factor authentication, and also what's the password complexity and rotation standards. So what rules do you have for the password? Also, you want to make sure you have an incident response plan. So if there is a cyber threat or a cyber an incident, what's the procedures? What are the plans in place to kind of deal with that? Staff training is extremely important. I think the number one way that cyber incidents occur is through employees, especially the emails. So making sure you have annual training on that, having documented that the training occurred, and maintaining those records. So how do you feel about your organization's cybersecurity policies? Either we've done a great job with all or most of the required documentation, we could use some improvement based on the new uniform guidance rules, or we need more help than I thought. So like I said, this is a new area. It's probably an area that some organizations already had something, but now it's the time to kind of take a closer look and making sure that you have everything in place for your organization.
And thank you everyone who is casting their votes. We are running into the last seconds to cast your vote, so be sure to get that in. Again, you're just going to scan the QR code with your phone in order to cast your votes via Conferences IO. Few more seconds. And there we go.
Oh, great. So almost over 50% of you are saying you're doing a great job and you have all or most required documentation. So that's really great to hear. So you're already ready for the new standards. All right, some other areas that they revised or they added. So enhanced transparency and disclosure requirements. So this was an existing area that they now revise. Essentially, in the past, if there was any violation of the law regarding fraud, that had to be reported to the federal agency. They now changed that to say it has to be a credible evidence of violation. So it's no longer a legal determination. If you have evidence of some sort that leads you to believe that fraud's occurring or waste, abuse, something suspicious regarding the organization's use of federal awards, procurement, things of that nature, you're required now to report that to OMB or the federal agency. So credible evidence of violation, it's going to be more than just a suspicion. You need to have some sort of evidence, but you no longer need to get to the level of a firm legal definition of a violation of the law. So they are making this a little more easier for someone to get to the level of where they have to report it. So with this new standard, you do have to inform all your employees and board members about this, that what their responsibilities are regarding disclosure, because all recipients, subrecipients, applicants, anyone receiving awards are required to follow these disclosures. And these disclosures need to occur promptly. So you're allowed some time to assess the evidence and make sure it's credible, but you're really not supposed to sit on it. So you gotta make sure you are informing and training your staff regarding these disclosure requirements, and including the board in that as well. So the other one here, this is brand new for uniform guidance this year, for the new revision, is whistleblower protections. So I know a lot of organizations already have something along these lines. This has been a question in 990 on the governance area if you have a whistleblower policy. So OMB is now including that within the uniform guidance here. So you have to inform all employees and inform them in writing of their rights for this. The protection extends to all employees, not just those who are involved in the federal award. So the types of protected disclosures is evidence of gross mismanagement of a federal contract or grant, gross waste of federal funds, and abuse of authority relating to a federal contract or grant. So what to do now, if you already have a whistleblower policy, make sure that all employees had access to it, that they all had a copy of it. If they didn't, you want to do that now. You want to include this policy as part of your onboarding for new employees so they have it when they first come on board with this new requirement. So now we get to the key threshold changes. So I'm gonna now pass it off to April.
All right, so as Adam mentioned, here are some of the key threshold changes at a glance. So the first one's related to the single audit threshold or program audit threshold, where previously if you had expended $750,000 in federal awards, you were required to have a single audit in accordance with the Uniform Guidance Regulations performed by your outside CPA. Now that threshold has been updated to be $1 million, effective for organizations 12/31/25 year end and beyond. I mentioned a little bit about the de minimis indirect cost rate, about it being 10% on federal awards, and some of the feedback had been that it really wasn't enough to cover an organization's overhead. So it has now been increased to 15%. The equipment retention threshold was $5,000 previously and has now been increased to $10,000. So that is what would go into your budget in the equipment line. And similarly, you can elect $5,000 or choose to increase to $10,000 your GAAP capitalization policy as well to more align with your federal awards. The unused supplies threshold previously was $5,000 and is now being increased to $10,000. So if you have supplies on hand at the end of your grant period that exceed $10,000, funds would have to be given back to the grant agency. The fixed amount subaward cap previously was $250,000, and that is now being increased to $500,000. The modified total direct cost subaward inclusion base used to be the first $25,000 and is now being increased to the first $50,000. So all direct salaries and wages, applicable fringe benefits, materials and supplies, services, travel, up to the first $50,000 is included. Here again is that threshold for the single audit. Previously, it was $750,000. Now it's $1 million. And again, it's not based on the cash received or the award amount from a federal agency. It's going to be based on how much you've spent on those awards. It's truly based on the expenditures. So some organizations are potentially no longer going to be subject to a single audit if they are below the $1 million threshold. So you'll want to make sure you understand what the total expenditures are and confirm with your auditor the type of audit that you're going to need. It applies to all non-federal entities fiscal years beginning on or after October 1, 2024. Compliance obligations remain even without a single audit. So again, these uniform guidance regulations that we're speaking about today, they relate to your compliance with your federal awards, regardless of whether or not you meet this audit threshold. Program-specific audits will still apply. So even if you even if you fall below the $1 million threshold, individual federal programs may still require you to have a program-specific audit. So make sure that you check the terms of each of your awards and grants to make sure that you're in compliance with them. So again, here, the de minimis indirect cost rate, it used to be 10%. It's now being increased to 15%. So for organizations that have never had a negotiated indirect cost rate, you can use a de minimis cost rate within your grants. The federal agencies and pass-through agencies cannot require a recipient to accept a rate of less than 15% now. So that is mandated by the federal regulations. So if you have a direct federal award and you have a de minimis rate of 15%, great. It's been increased for you. It'll help cover your overhead and your G&A. However, for agencies where you're using a federal de minimis rate on your federal awards and you have a pass-through to the state agencies, they also now need to accept this 15% to pass it on to you. So pass-through entities must accept all federally negotiated indirect cost rates unless otherwise required. Nonprofits with a negotiated rate can now enforce it across all awards. The modified total direct cost base now includes the first $50,000 of all subawards, up from $25,000. So potentially increasing your indirect cost recovery for organizations with subrecipients. So here's really your two rates for options: the de minimis rate, which is now going to be 15%, or organizations can have a negotiated rate. Here are some pros and cons of each of the rates. The de minimis rate is a little simpler, easier to apply. It may apply better for smaller, newer organizations. There's no renewal process. So overall, it's really simplistic to use the de minimis rate of 15%. The cons of using the de minimis rate, though, is that your costs, your indirect costs, may be higher than the 15%. It's not available if you do have a negotiated rate. So if you have a negotiated rate, you do have to use it. It may understate your actual indirect costs for larger organizations. Now, if you do decide as an organization to apply for a negotiated rate, it can exceed the 15%. So you may be hired to a 20-25% indirect rate for your organization. It is something that you need to apply for. It will support your long-term financial stability. And pass-through entities are required to honor the negotiated rates as well. So the cons of a negotiated rate would be that there is a formal cost rate proposal and negotiation. You do need to review it periodically, and it is subject to approval by your federal agencies. So they can scrutinize and potentially adjust what you're applying for with your negotiated rate. So for your organization, you'd want to kind of go through this assessment and see what makes the most sense for your organization, whether you're going to use the de minimis rate, which is now 15%, or apply for a negotiated rate on your federal awards. So what the law now requires. Pass-through entities may not require your organization to use a de minimis rate that is lower than 15% unless a federal statute specifically mandates it. So pass-through entities must accept all federally negotiated rates for subrecipients. Refusing a negotiated rate is a regulatory violation. So recipients and subrecipients may now notify OMB of any disputes regarding a federal agency or a pass-through entity's application or acceptance of a federally negotiated rate. So yes, I think you read that correctly. What an organization can do now. So if you have federal funds and they're being passed through a state organization, if the state is not passing on that rate through your state grants, it is something that you can file a dispute now with OMB. So what should you do? Cite the regulation in meetings that you have with your state grant agencies. Make sure that they're aware that the 15% rate or your negotiated rate needs to be followed through from a federal level into your state grants. Provide with documentation, give them your negotiated rate agreement, cite your de minimis rate if that's what you're using. You can escalate to the federal awarding agency as well. So if the pass-through entity, your state or your county, refuses to accept, you can escalate it to the federal awarding agency. You can also then now file a dispute with the OMB. So if the federal agency fails to resolve it, you may now formally notify OMB of a dispute. So you would submit that through the OMB's website and contact the Office of Federal Management and Federal Financial Management. So again, these rates do need to be passed through from federal through your state awards, and you can take action if that's not being done now. Okay, next polling question. So again, scan with your phone the QR code at the bottom of the screen here. For the nonprofits who are our attendees today, we're curious, what rate does your organization currently use? Are you using a de minimis rate? Are you using a negotiated rate? Or neither, because you have state-only funded contracts that are subject to the uniform guidance rules?
And I'm seeing votes come in, so thank you to everyone who is casting your vote. We're about halfway through our countdown. Again, as April mentioned, just scan the QR code to cast your vote via Conferences IO. And we are nearing the last 10 seconds to cast your vote. And votes are in.
Okay, so it looks like the majority of you are using the de minimis rate. So then I think great news that it's increasing from 10 to 15% for your organizations. Just to reiterate real quick, as we're moving along through the presentation, feel free to drop your questions into the chat or the Q&A box. We'll be happy to get to them if we have some time at the end of the presentation. If we do run out of time, we'll be happy to answer them after the presentation and reply to you each individually, but we may get some time for Q&A at the end. Okay, so a little bit more for you here about the equipment supplies and fixed subaward changes. So previously, the acquisition threshold was $5,000 and it's being increased to $10,000. So that would mean that any purchases for items under the $10,000 are now considered to be supplies and not equipment. Equipment valued at or below the $10,000 may be retained, sold, or disposed of with no further federal oversight from the agency. So again, if you have something over the $10,000 that you purchased, in order for you to sell or dispose of it, you have to go back to the grant agency. In order to take advantage of the new threshold, your organization must update its capitalization policy from a GAAP perspective in order to take advantage of that as well. Equipment inventory, physical inspection requirements remain. So what can your organization do about this new threshold? Look at your GAAP capitalization policy and ensure that your accounting reflects the new $10,000 threshold. So that way you can be in agreement between your GAAP accounting policies and your federal budgets and reporting. When it comes to supplies for your organization, the unused supplies threshold has increased from $5,000 to $10,000 for federal reimbursed obligations that closed out. So the $10,000 threshold applies to the aggregate value of all unused supplies at closeout, not just per item category. If your organization has more than $10,000 in unused supplies, you must either use them on other federal awards or compensate the federal agency. So a tip for all the organizations on our call, on our webinar today, is to conduct a supply inventory about the 60 to 90 day mark before your grant closeout to just ensure that you're going to be below that threshold, that you won't have any issues when the award period ends, and that you won't have to compensate or give any money back to the federal awarding agency at the end. So part of that planning and that inventory management is going to be really important. Fixed amount subawards. There is a cap on fixed amount subawards, and it increased from $250,000 to $500,000 now. So prior federal approval is needed for any dollar amount. Fixed amount subawards do not require monitoring of actual costs, and you only need to verify program performance. So what should your organization do? Review your current subrecipient agreements. Partners receiving under $500,000 may be candidates for the fixed amount structure, which would avoid any burdensome costs in terms of cost tracking. All right, we're going to go into the procurement roles now. Adam?
All right. Thanks, April. So there were some changes as well regarding procurement. So procurement is the methods in place for purchases when using the federal awards. So starting off, just reiterating this, that everything needs to be documented. So you must have a written procurement policy. Every purchase, there's 5 different methods for procurement, and every purchase must use one of these methods. And you really want to create maintain documentation about your purchases at the time of purchase. Like I said, everything needs to be documented, including reasons why or how you came to that purchase amount or that vendor, things of that nature. So the 5 procurement methods. So starting from micro purchases, less than or equal to 10,000. This is pretty straightforward. No competitive quotes are required. You just have to document why the price is reasonable. So simplified acquisition. In the past, this was called small purchase. They changed the name. This is anything above 10,000 up to 250,000. So for this one, you do have to obtain price or rate quotes from an adequate number of qualified vendors. In the new uniform guidance, they clarify that you can decide what an adequate number of qualified vendors is. You just have to document your reasoning. So there's no formal standard on how many vendors you need to look at. Um, you just have to document how you got there. Competitive proposals, so services over 250,000. You have to issue an RFP for this one, stating evaluation criteria and the different weights of those criteria. And the award would be based on best value between price and technical merit. Next one, this is more rare for nonprofits, but sealed bids, which is any goods you're buying that are over 250,000, you have to publicly advertise, and also do the open bids publicly at a stated time and place, and then this awarded to the lowest bidder. And the last one here is non-competitive, basically a sole source. And a new revision of uniform guidance, they clarified when this is really acceptable to use. So as long as you hit one of four listed here, you're allowed to use it. So if only one source exists, if there's some sort of public emergency requiring immediate action, they kind of waive the procurement methods up above. The federal agency authorizes it in writing, or an open competition failed after solicitation. So this one is also fairly rare. So you're really looking at the first three for procurement when all things considered. I also want to mention about the amounts. So these amounts were when the revised uniform guidance came out. Since then, there's been some inflationary adjustments. So these amounts have tweaked slightly since then, and they will probably change slightly each year going forward. But these are the original amounts released from uniform guidance. So what you must have in the file for each of these kind of purchases to ensure your compliance with the standard. So micro purchase, you want to have the vendor name, the amount, what was purchased, and then a brief statement of price reasonableness. That you want Amazon, all the prices were pretty consistent is valid. For simplified acquisition, you want to have all the vendors listed that you solicited, what the quotes were, either the actual quote that was in writing or if it was a verbal quote, and the reason why the vendor was selected over the others, including a statement on the price reasonableness. For competitive proposals, you want to include the RFP with the different criteria and their weights, and then just an evaluation on how each proposal scored using that criteria. Sealed bids, just the invitation for the bid with the complete specifications and then evidence that everything occurred with the public advertisements and things of that nature. And then for non-competitive, just a written justification citing which of the four permitted exceptions applies, and then just sign signature of an authorized official, and then just a quick price analysis showing the price is reasonable. For all purchases, you do want to do a debarment check through sam.gov, making sure that none of the vendors you're using are debarred from the federal government contracting. You want to do a determination about the vendor's capacity and integrity, and also need to have the conflict of interest disclosure from the person proving the purchase.
And Adam, can you clarify too with those thresholds if it's per item for each purchase or whether it applies to the vendor in a whole?
It's per purchase per unit. So one of the changes regarding conflict of interest policy, like I mentioned before with a whistleblower, this has been a common question in 990 for nonprofits regarding governance. It give a conflict of interest policy. OMB is now revising for their own practice that they want to include board members in this as well. So what changed? Board members are now explicitly added, so they cannot participate in contractor selection, award, or administration if they have a real or apparent conflict. So what real apparent just means that if it looks improper to an outside observer, then they should recuse themselves from any decision. So what you must now include, you need to have an explicit statement that board members are covered. It's not just a staff anymore. A mandatory annual conflict of interest disclosure form for all board members and all staff involved in procurement decisions. When a conflict exists, you need the documentation from the person that are stepping away and the recusals in writing. You want to make sure in your policy you include what would occur if violations did happen, so what discipline would occur, and also a prohibition on gifts and things of that nature. For time constraints, we'll skip over some of these scenarios and we'll keep moving along here. Some other changes. There was a clarification that when you're engaging with a contractor, you want to make sure that they're properly treated under the Fair Labor Standards Act. So making sure they're a true contractor and shouldn't be classified as an employee, things of that nature. Not really an audit of any sort, but just a quick writing documentation on this. And then it's optional, but you can also score bids on community benefit. So essentially, you can score bids based on mission-related items, committed to local jobs, on-the-job training, worker protections, things of that nature. You're allowed to now include that as part of your scoring. So that was procurement. I'm now going to pass off to April, who will tackle this endless debate on subrecipient versus contractor.
It definitely may be an endless debate. So two very different situations here is when you have an award and you're contracting with a vendor, whether or not they are truly a subrecipient of your federal award or whether they are considered a contractor. Here are two buckets to help you decide whether they are a subrecipient or a contractor. And the reason this is important is because subrecipient is going to be much more strict. It's going to have more oversight and regulations behind it because, again, you have to be in compliance then with your federal awards. So, subrecipient. The subrecipient is going to determine who is eligible to receive federal assistance. The subrecipient has its performance measured against whether federal program objectives were being met. A subrecipient has the responsibility for programmatic decision making. A subrecipient is responsible for adherence to the federal program requirements within the award. And a subrecipient implements a program for a public purpose and not just for providing goods and services to the pass-through entity. A contractor, on the other hand, provides goods and services within its normal business operations. A contractor provides similar goods and services to many different purchasers. A contractor normally operates in a competitive environment. A contractor provides goods and services ancillarily to the implementation of the federal program. And a contractor is not subject to the federal program compliance requirements as a result of the agreement. So it's important to understand when you're contracting with a vendor whether they're going to be a subrecipient or a contractor as outlined in your agreement. Here are 5 questions to also help with making that decision. So number 1 is who designed and controls the program being delivered? So if it's a subrecipient, they have the authority to design how the program works and make decisions about who is served. If you are a contractor, on the other hand, the services provide to fulfill the program designed by the awarding organization. Second question here to ask is how is performance measured? If it's a subrecipient, performance is measured against the federal program objectives. If it's a contractor, performance is measured against your regular contract deliverables. Question 3, does federal compliance flow through to that vendor? So a subrecipient must comply with the federal program requirements. A contractor does not need to comply with them. Question number 4 you should ask is, does the entity serve the public or serve your nonprofit? If a subrecipient, if you determine your vendor to be a subrecipient, they directly serve the public on behalf of your federal program. If they are a contractor, they would be providing goods and services that benefit your organization's operations. Fifth question that you can ask is, does the entity operate in a competitive marketplace for this service? So has unique mission-aligned roles and would not typically compensate for this work on the open market. If a contractor, they provide these goods and services to many buyers in an ordinary course of business. So hopefully this can help your organization determine if you are giving funds to a subrecipient or a subcontractor. So what's expected now? Again, documentation. There are documentation requirements around all of this in determining if they are a subrecipient or if they are a contractor. Before making a subaward, your organization needs to assess the risk for each of the subrecipients and then design your monitoring accordingly. So you may have higher risk subrecipients that require more intensive monitoring and then lower risk subrecipients that require less. So you'll want to perform this risk assessment and then ongoing monitoring activities. So reviewing financial reports against what's budgeted, reviewing programmatic performance. Overall, if you decide that someone is a subrecipient, you have to design all of your procedures to address risk and monitoring and then document everything. So on the next page, we talk a little about award closeout. So you'll want to start your preparation early when closing out your awards. You do need to comply with a 120-day requirement for closing out the awards. And if you do have subrecipients, you need to close out those awards within a 90-day period. They then allow that extra month for you to close all of your awards. So unused supplies, you're going to want to look at your unused supplies when you close out your awards. Make sure you have all of your documentation for your subrecipients, and then budget versus actual final reconciliations at the end of your award closeouts. If you have awards, I'm sure you've gone through this before. Okay. Adam's going to touch on program income next.
All right, so I see we're getting close on time, so I'll just hit the key points here. So program income. So this is basically when your gross income earned by your nonprofit generated from a fairly funded project or program. So basically, under the new uniform guidance, they had some revisions and they clarified what are the 3 authorized use methods in that middle section here on the slide. So the default one for nonprofits is the deduction method. So basically, program income is deducted from total project costs. So that reduces the amount of federal funds drawn. Just want to make the clarification. So institutions of higher education, they have a slight exception where their default is the addition method. That's where a program income is added to the total award, expanding the scope of work. For all others, you need to have prior approval. And the last one here is cost sharing and matching. Program income is used to meet the required matching or cost share obligations. Once again, prior approval is required for this method. So there were some updates to the cost principles. So the first one is regarding administrative staff. So staff who spend time directly supporting a federal program may now charge that time as direct costs, not just as indirect costs. So it has to be proportional. So the administrator spends 40% of the time on the federal program. 40% of salary can now be a direct charge. With all things due from guidance, just need to have it documented, have time and effort records, things of that nature to just document the what's going on there. Participant support costs. are allowable. So this is stipends, transportation, per diem, and temporary dependent care. So this is allowable costs for nonprofits. Pre-award costs, so costs occurred up to 90 days before the award start date, may be allowable if they would have been used. It would be allowable if they would have been allowable under the contract. If the award is not made, you can't recover those costs. And then here's some cost flexibilities. There were some categories that were unallowable, or at least they required prior approval. They narrowed that down to just a few. So foreign travel, capital expenditures, pre-award costs beyond 90 days, and then certain subcontract arrangements. And one last point here, vacation balances. So an employee leaves, and they have vested PTO. That vested PTO payout is no longer allowed to be charged to a federal award. So performance measurement reporting, OMB made some changes here. They're looking for more measurable outcomes and goals, things of that nature, really more in line with what a lot of private foundations have been asking from nonprofits. So now federal agencies will be asking for similar work, very data-driven, on what your achievements are, things of that nature. And remember, there was an earlier slide, I believe, where we mentioned, or it was on there, that the cost for that tracking, things of that nature, would be deemed allowable under the federal awards. So for grant applications, one of the main changes that OMB wanted to do is make sure that applications were a lot easier for nonprofits to navigate and eventually apply. They want to make sure that smaller nonprofits have the same opportunity as a big one. So they're requiring plain language. They can't use any real technical jargon. Must be clearly communicated. They're shortening these applications. They're adding an executive summary. One other area which in the rules, they're saying agencies should consider diversity. I know with the current administration, I'm not sure how much that'll be followed, but that is in the rules right now. And they're also emphasizing the advance payments. That was already in the old uniform guidance, but there's adding the extra emphasis that advance payments for federal awards should be the default unless there's circumstances that prevent that from happening. If we go to the next slide here. So what makes you qualify for advance payments? You need to have written financial management procedures to ensure that time is minimized between receipt and disbursement of federal funds. You want to make sure everything is documented and that accounting systems can be able to track the federal funds separately from non-federal funds. A willingness and demonstrated ability to maintain these procedures and to ensure everything complies with federal law. So that should be the default standpoint, is that advance payments are how the award is given to you and not cost reimbursement, which is pretty commonly done nowadays. So when reimbursement is used instead, so basically the nonprofit can't meet these thresholds, these qualifications, the federal agency will default to cost reimbursement. The federal agency can invoke certain conditions, or the nonprofit itself, you may request cost reimbursement instead of advanced draws, and then the awarding agency will definitely follow that. So our last poll question. So what federal agency does your organization receive the most funding from? So we have Department of Agriculture, Department of Health and Human Services, HUD, Department of Education, or other. So it's our last polling question. So if you missed the first one by any chance, this is your last chance to get 3 in for CPE.
And I'm seeing a lot of those votes coming in. Thank you all for participating in our final poll. Again, you're just going to scan the QR code in the corner of this page with your phone to cast your vote via Conferences IO, We are nearing the last few seconds to cast your vote. So as Adam mentioned, this is a great opportunity to fulfill the majority of the questions by casting your vote for this last one. And votes are in.
All right. So nice mix. So a lot of you have other agencies, but followed by that, Department of Health and Human Services. So I know we're running a little over here. There's a lot of content based on all the changes. We'll conclude here. April, I'll let you start.
Sure. Okay. So we wanted to provide you with some tips for your next single audit if you have it coming up. So thank you again for joining our webinar today. Just a few more slides for you. So review and document your internal controls. Again, the key is always documentation. So walk through your key areas such as cash receipts, disbursements, your procurement policies. Make sure that it's all written down. Get your award files in order. Make sure that you have documentation for your awards, your subrecipients, your CIFA detail. All of that documentation is in one place for your federal award. Check your policies against the new thresholds. So the capitalization policy, if you're going to increase to the $10,000 to be in alignment with your federal awards, take a look at that. Also, if you're going to use the de minimis rate or if you're considering a negotiated rate, you'll want to have those conversations. Review your procurement policies as well.
You want to make sure cybersecurity is included as well as part of your controls. Remember, that's a new addition to the control environment for OMB, for uniform guidance. I know most of you said that you're feeling pretty comfortable there, but just double check that. If there's any prior findings, you always want to make sure those are addressed before your next single audit. That's definitely one of the areas that an auditor will look at. And then finally, you want to make sure your team is trained on all these revisions. There's a lot of small areas here and there, but you definitely want to make sure everyone's aware of them and your team is properly trained so you can avoid any compliance issues. Whether you have a single audit or if you don't, you still want to make sure everyone's aware of what's occurred.
Perfect.
So we have some resources. So April and I do a video series, fairly short videos, about 10 minutes each, on various nonprofit topics. We include guests on there for all your non-financial topics, more operation related. I just want to point out we have 3 episodes regarding uniform guidance. So the basics, what to expect in the audit, and the next one about to come out is common findings in uniform guidance. So if you're interested in more of the basics behind a uniform guidance audit, things of that nature, there are 3 videos here. And then finally, just we have our bios here, so I won't really go into it, but our emails are on the bottom left. If you have any questions on anything we went over, if you want to discuss anything within your organization about complying with these new standards, new revisions for uniform guidance, we're happy to discuss further with you. If you want us to reach out because you have any questions, definitely just mention in the chat or Q&A box that you'd like an email for a reach out. We'll definitely contact you and speak to you about what issues you may have.
Yes, thank you all.